Let's take a look now at a risk event for the week starting Monday, the 6th of September. For that, we're now joined from Daily FX by Justin McQueen. And it's a good day to you, Justin, as we look at, I note that non-farm payroll data out later on, but looking ahead to the risk event for next week, what's going to steal your attention?
Good morning, Jeremy, and thank you for having me. In terms of next week, we're looking at the Australian dollar, and in terms of the pair will be Aussie Kiwi with the RBA monetary policy decision out next week. Now, while we've seen some encouraging data this week for the Australian dollar, particularly domestically, with lights of Q2 GDP and also the trade surplus, trade balance data relatively strong as well at record levels. But however, we have to take in context the fact that with Q2 GDP, it is very much backward looking, and the majority of the third quarter has been in a strict lockdown. And so therefore that looks to be the last of the sort of good news on the data front for the Australian dollar. And given the lockdown measures that have been in place for pretty much the majority of the third quarter, there is potential that the RBA may in fact delay its plans to taper bond purchases, which was expected to be tapered from 5 billion Australian dollars to 4 billion. However, given the lockdown measures and expectations that we will see a contraction in growth in Q3, we could instead actually see that delayed. So that would be pretty much the main focal point, but also as well the commentary from the RBA as to whether they signal any concerns over the spread of the Delta variant, which has hit record daily increases in terms of the number of new cases in Australia. So therefore that'll be something to watch out for. And given the fact over the past week we've seen this sort of corrective rally on the Australian dollar, the reason why I wasn't looking at Aussie dollars, of course, later on today we do have the non-farm payrolls report, which of course there is a volatility expected in that pair. So therefore we're looking at Aussie Kiwi, but also as well, we take a look at this second chart here. As you can see with the blue line, rate differentials continue to move in favour of the New Zealand dollar, which of course the RBNZ are much closer to raising rates as opposed to the Australian dollar, was opposed to the RBA, who continue to signal that they won't be raising rates until 2024. So again, that's another factor that's moving in favour of the Kiwi ahead of the Australian dollar. In terms of levels to watch out for, as you can see here, we have the recent highs, weekly highs at around about 104.35, and also the 20 DMA at 104.45. So I do expect this level to have a bit of a resistance, and potentially these may be levels to actually get in terms of the cross and look for a move back down to the year-to-date lows. If I was to be wrong in terms of the direction, we actually see a bit more of a corrective rally than a close above 105.40 to 45 would be the levels that I'd probably reassess this trade. But in terms of the general direction, I do continue to expect further downside in the cross.
Justin, thanks very much indeed. Justin McQueen from Daily FX looking at a risk event for the week starting Monday the 6th of September. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.